How can I even do this recording? I would like to record.
I'll show you that later.
Okay. So now, let me quickly go through this thing again, because I'm still trying to determine market direction, and I'm not trying to predict. I'm not trying to forecast the markets for. I'm not trying to get a daily forecast. It's just something that, like, should I say scalping, but not really scalping per se. Just within London session, trade and get out of my trade before New York, because I don't like trading New York. So now I'm waiting for the market to give me feedback on what it wants to do. So because what I do is I capitalize on the movement it's going to make. Sometimes the market might be bullish, but it might want to go down during London session, then go up during New York. So since I'm trading London session, I want to capitalize on any movement it's making during that London session. Even though I know the higher time frame is bullish, if I can see any sell signal during London session, I will trade against that overall trend, because I know there's only a short-term trade that I'm closing after a while. So what I do is, just to be sure, I wait for all these things. You have to be patient, because if you get into the market just for the sake of clicking buttons, it's you that will regret at the end of the day. So what right now, I'm just waiting for the market to take out any liquidity pool for me. Then I'll be sure of where it's moving to. Initially, like since yesterday, because I was looking at the market from yesterday, which was on Tuesday. This was what the market did yesterday. Actually, we need to remove these things. Now, this is what the market did yesterday, Tuesday, because I was looking at it in the night. This is Tuesday yesterday. So the market opened yesterday, went up. This is 3 o'clock. That 3 o'clock I'm talking about. Now look at this move. This is what I probably would have traded, just this small move here. But then, according to ICT, this is a fair value gap here. So the market is inside this fair value gap here, and this fair value gap acts as resistance to the market. So another thing is, when the market is testing a fair value gap like this, it's very likely that it will be violated. But then when I look at market structure, from here, what I'm seeing here is that we now have like a market structure shift, indicating that the market wants to start retracing at least 50% of this range. But all these things are just top. These ones are just overall analysis. I'm only looking to capitalize on what the market is going to do here today. I'm not going to do, but this thing is just when I'm taking future trades, I'll know where I am in the market. If we trace back to 50%, so you shouldn't expect a sell from here, because we've already retraced 50% of that range. So I will not be looking for a sell. But that is why I do all these other ones. But then as a day trader, I'm just looking for something inside London to trade. Now, right now, I'm not seeing much. Right now, I'm not seeing much from London. Because if I was in front of my chart right now, I will not even do anything. I'll just wait for this market. I'm not actually seeing much from this market. I was looking at this thing, because I look at AUD, GBP USD, and Euro USD together. So I was looking at AU yesterday night. The thing had this large move overnight. It took out last week low, this previous week low. It took it out, because these old highs and old lows, they matter when it comes to ICT. So I was expecting this retracement, because after this thing, there was always a pullback. So I was expecting this retracement, and if it's going to retrace, this one is showing weakness. AUD is showing weakness. So if it's going to retrace, these ones will use that opportunity to go up. So I was just waiting for that feedback, sure. But let me see. I think I'm starting to get a signal. 2 o'clock. Okay, so now this is what I'm going to do. Right now, we have, like, if you look at this market here, basically we've been bullish from here, just this short-term trend here. So we've been bullish, then we came down here, took out this low, then we started going up. So I'm expecting that this market is going to go up, and I'll be buying this market from this fair value gap here. because this is 1 hour time frame. I'll be buying this market from this fair value gap. Another thing that will make me buy this market is from 7 o'clock. Most of these things are just time based. I just look at time when I'm making my analysis. From 7 o'clock here, this is like Asian Q zone for Forex, ICT, this thing. So from 7 o'clock here, when the market was going down here, we clearly had this shift. Yeah, I don't know if you are seeing what I'm showing you. So we had, well, this is like, if someone is going to trade Asian session now, it's between 7 o'clock to midnight. That's New York time. So from going by what happened during this Asian session here, the market was bearish. Then the market turned and was bullish. So I'm expecting this bullishness to continue into London. So I'm going to buy this market from here. Then I'll probably just target 2RR and then I'll be done for the day. I think I'll target this high. I will be doing something like this. I think I will not enter from here only. I will enter for my 5 minutes. I'll look for a retracement into a favor here. Yes. So I think I will entering from inside this fair value gap here. Well, normally I won't take an entry before 9:30 because I know that during 9:30 there's still another wave of volatility that comes into the market that can take you out and then still go in your direction. So sometimes I want to just wait till 9:30 to be sure that okay, that all those things has passed. And I was looking at this thing this morning. I was looking at my Forex factory this morning. There is no news at all because I like to trade when there's news because news will push the market in my direction. Not necessarily red folder news, but just this orange folder, not yellow, just orange folder news. It brings volatility into the market for me. So I will take my trade from inside this fair value gap here. I will place my stop loss here. Then I will target 2RR. I think this is how I'll trade. This is just it because when you look at and this now, let me just say the logic behind this trade. Why I would trade this. If I was trading my prop account, this is exactly how I'll trade. And the logic behind it, the framework behind it is that I'm coming. I think it's minutes. Okay, the framework behind it is that this is during Asia, we were bearish coming into Asia. And then during Asia here, the market turned. Now, most times when the market reverses during Asia, you will expect the market to continue in that direction that it reverses. Most times, not every time, but I will expect the market to continue in that direction that it reverses during Asia. So now I'm bullish. And also when you check your 1 hour time frame, when you look at the 1 hour time frame, I have a fair value gap here that is being respected. So let me quickly, I have a fair value gap here that is being respected. A 1 hour bullish fair value gap that is being respected. So that alone is another reason why, because when a bullish fair value gap is being respected, it shows that the market is bullish. And this is a bearish fair value gap, but this bearish fair value gap has been tested. I think 1, 2, 3, 4. It has been tested 4 times. It's supposed to act as resistance because it's a bearish fair value gap, but it has been tested 4 times. And basic law of resistance and basic law of support and resistance is that when you keep testing the support, you will eventually break the support. The same thing with resistance. If it's a strong resistance, it's not supposed to be tested so many times. So this fair value gap has been tested here again, left it, visited it again, left it, revisited. So it has been. So I don't expect this fair value gap to hold. And once this fair value gap is going to get violated, which it will. Once it's going to get violated, the next target for price, the next swing high that is within sight from, like if you're entering your trade from here, the next swing high that is in sight is this high here. So like this is for, the thing is I only trade 2RR. Like even if I know the market will go 10,000 kilometers, I take 2RR and I'm out. It's just like my model. Let me just put it like that. But I'm coming. But this is my target for the market. From the current place it is now, I'm expecting it to go all the way up here. Basically, I'm expecting it to breach. It's already going up. I'm expecting it to breach and break into 127 and then get to at least 127, 150 before any reversal. I'm not actually interested in what will happen for the whole day, like what New York would do or what the market will eventually do. But I just know that from right now that I'm looking at the market, I'll take a trade. I'll place my stop loss there and it will get to this high that I marked out before any other thing is supposed to happen. I'm not saying I'm not commanding the market, but that is the only thing I'm looking at right now. Like it should do anything it wants to do. If it wants to go to 10,000, it should go. If it wants to let that go down, it should go. But it should just get to that's high. Because if you check it now, from where we are, this is the next high, not this high, this high. Because these three candles, sorry, let me change this thing. These three candles, 1, 2, 3, they are the ones that formed this fair value gap. And now that I'm expecting this fair value gap to be breached because it has been tested many times. And another thing again, why I think the fair value gap will be breached is that each time the market tests this fair value gap, it did not take out this low. I'm expecting this low to be taken out on NFP Friday. That one is something for another time. But each time after it tested it here, it broke down here. This is the normal. This is how you expect the fair value gap to react. Look at this fair value gap here. After we traded back into this fair value gap, see the way we left it. We came back into this one here. See the way we left it. Now we came back into this one. You can see we did not leave it. Eventually, we did what? We breached it. This is a fair value gap here. We came back into it. If someone is trying to trade ICT blindly now, you might say, okay, because fair value gaps are supposed to act as resistance. So, okay, we're coming into this fair value gap. Let's sell. But no, we came into this fair value gap. Look at how we didn't leave this fair value gap with any energy. So this fair value gap is already looking like something that we will breach. Okay, fine. Eventually, we breached it. We came down. This one was a liquidity grab here. This right here was a liquidity grab. 10 o'clock. That London close session. So this was liquidity grab before the thing started this new move. Just like before like ICT says, before there is any move in the market in any direction, there have to be like some sort of stop hunt. So if you check it now, anybody that bought from here and was profitable here and came down and was profitable, the market will have to come down here, take out, clear those people that if you bought from here and you trade your stop loss here, they will take you out. And then if there are buyers from here, most of these buyers here will most likely put a stop loss here at this low. So the market came down here, took out this low. Now this sweep on liquidity here is why I'm bullish in the first place. Because according to ICT, this is a sell side liquidity. Once there's a sell side liquidity grab, we're expecting the market to run towards buy side. Once there's a buy side liquidity grab, we're expecting the market to run towards sell side. So in this case now, we've taken sell side here, and we took it during London close, which is from, I think it's 10 to 11 years. This is 10 o'clock. This candle here is 10 o'clock candle. So we took it. All this time, they matter. They actually do matter a lot. This is also inside Asian. This is Asian low, like Asian session low. So it's also a significant low. It's not just like any random low. These lows and highs, that some of these lows and highs that I will not regard, but some of them are important. So now, we took out Asian sessions low. Then we started going up. Now, we came back. Now, all this, the remaining thing that this market is just supposed to do is just basically respect market structure, because now we've taken out this low. We have no reason, at least for the short term. This is 15 minutes, like this is 1 hour time frame. Like this is just intraday trading, just day trading. So we have no reason, at least for now, to come back here. So we are going to, after taking out a sell side here, we are going to, it's already obvious that we are going to disrespect this fair value gap here. We respected it here, we left it, we see the way we trade, see the energetic move we used to trade away from the fair value gap. But we came back into it here. We could not even break the previous low that came from this fair value gap. No, we did not break this low. We went back again, and if you notice, each time we're coming back into this fair value gap, we're creating higher highs. Even this one here is even higher than so. So basically, what it's trying to show is a bullish market structure inside here, thereby indicating that this fair value gap will be breached. And if this fair value gap is going to be breached, that means that we are most likely going to take out this high. So, as I said, I will normally wait for 9:30 before entering my trades, because the market's like 9:30, just sometimes 9:30, 9:40. Well, that is when I know that, okay, every manipulation that could come my way is probably over. Okay, now this is 15 minutes. Yes, 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 yes. So, as I said, this is that 5 minutes. Let me go back to that 5 minutes where I placed my entry. This is where I would have entered from here. Just at the like this is the fair value gap start. You know what the fair value gap is, right?
Yes, I do. I know what
Okay,
a favor gap
okay,
is.
okay. So like this is the high and the low of the fair value gap. Just to make sure that I get tagged in, I will put my entry at the high of this fair, just at immediately at the high here. It can retrace into the fair value gap. My stop loss is supposed to be at the third candle of the fair value gap, the low of that fair value gap, the third candle that form. But if there's a swing low close by, I will put my stop loss there. But if there's no swing low there, like if the swing low, the closest swing low is far, I will put it at the third candle that formed that fair value gap. Except in a situation where the middle candle has a wick that extends higher, lower than the third candle, then I'll put it at the end of that wick. But in this case, this is where I want to be buying from. This is where I want to be buying from. Inside this place with my stop loss here, and I've explained it to you. Is I used 1 hour time frame to like that is what I used to make this decision that I was going to buy, because in the 1 hour I'm seeing the 1 hour bullish fair value gap. I explained why I think this fair value gap will not hold and everything. So if I'm right in my analysis, we should take out this high. If I'm wrong, then I will hit stop loss. That's just the only two things. And then once I take a loss, I'm done for that day. I think I only trade Tuesday, Wednesday, Thursdays.
Okay.
We're approaching 9:30 now. I think when we get to 9:30, we have some sort of volatility again, like aggressive move. If you notice, the market has kind of like been in us, has not even moved much. And part of this thing is down to the fact that there is no news this morning, honestly. And I don't like trading in this kind of conditions. I don't really like trading in this kind of conditions because I don't like being in a position and then holding my position till New York. I don't like it.
What about the news by 10:30, the global service PMI?
Let me look at it. Is it this one you're talking about?
Yeah, service PMI.
This one, like these are yellow folder news. I prefer this either orange folder or red folder. Any of these two is good because they are the ones that bring volatility into the market. These ones, they don't usually bring any volatility into the market. So it's usually those orange folder or red folder that I like using.
Okay, now let me share my stream so I'll analyze as well what you analyze.
Okay.
Okay, so literally, before I start my trading day, I go through the news events, and based on the news events, we can see that Euro has a lot of news this morning, and I already missed an entry on Euro. I'll show you the entry I missed this morning. I could have placed my pending order, but I was eating breakfast and I didn't place that order. Came back and I saw that started. Yeah, so the point there is that Euro has a lot of news. It has to do with service PMI for Spain, Italy, France, Germany, Euro Central, and London. Okay, that's global service PMI. And you might be wondering, what is this service PMI? So let's read a bit about what service PMI is in actual sense. In actual sense, they say that a higher than expected figure should be seen as positive for the pair, while a lower than expected figure should be seen as bearish for the pair. Okay, so by 9:15 we had the first service PMI and it was 53.1, which is lower than 53.2, which made Euro to be weak, and I knew that this would happen. Why did I know that this would happen is because on the long scale, let me go to the chart. On the long scale, I like to use that trade pair analysis of a thing. I woke up this morning and I saw AUD has dropped drastically, AUD/USD. And I was like, wow, why did AUD/USD drop? That was the question I asked myself. I went to the news and I saw, okay, they had GDP growth rate in the morning by 1:30, and it was a negative growth rate from GDP. When they say that a country's GDP is not increasing, it's bad. That's the purpose why the central bank is there as well, and that determines the success of a governor or a president in a country. So when the GDP is not growing, the country is literally dying. Okay, so if you're not growing, you're either dying. So
Yes, yes.
after that news came in by 1:30 West African time, okay, you see 1:30, that's when the drop started drastically. And when I saw the drop, I knew that, okay, there is high chances that other risky assets, euro is a risky asset, GBP is a risky asset. They would copy the move. They will copy the move. But before I guarantee that they will copy this move, I need to get a catalyst like a negative news, okay? And Euro PMI gave me the catalyst for the negative news. Meanwhile, this morning, as soon as I woke up, I knew that this is what a reoptimization zone. This is where I'm meant to get my entry for the sell. So once I woke up this morning, I knew that, yeah, AD is weak. This is where I'm meant to get the sell for AD USD, okay? And already I know this is the previous week low that has been taken. So I'll be aiming for this, my 4 hours validation point pips, and I'm risking.
I want to ask a question. Why are you placing your TP at that place?
Okay,
like, is there like a key level there that makes you place your TP there?
Yes. A key level there based on the past. What has happened in the past? See it here. I spotted it here. It's a total reversal zone in the past. That was April 19th, 2024. Markets from there skyrocketed, okay, started going up drastically. So why I place it there, because once the market gets there, there's going to be high influx of the demand and buys. So that's why I placed mine. It's a psychological level. So yes. So that's why I placed it there. So with that in mind, I went to 15 minutes time frame, and this is it. 15 minutes time frame, 15 pips stop loss. I don't know what just happened to me this morning. I saw 2 trade opportunities. See there, 15 pips stop loss, 45 pips take profit, and boom, 1:3. Wow. So then this was my euro trade that I missed. And I was like, man, let me not suck. This was my euro trade that I missed. As soon as I knew that, yes, AD was weak, every other risky asset is going to join into the week. This was my pending. This is where I placed pending order. To be frank with you, I drew this stuff, but I didn't go to my account and just place pending order, put my lot size, put my risks to reward. And based on euro, it's going to be 20 pips, and I'm aiming for this low. Yeah, this H4 validation point here, which is 51. Or there is a psychological level I've been aiming for. There's still high chances that euro would come and take out last week's low. Where is that last week's low? Okay, yeah, there's still high chances that euro will come and take out this last week's low with the help of NFP. So probably holding this trade for a whopping 1:5 is roughly 100 pips. Okay, because I can see that euro just got a very negative news, and this is a reoptimization zone over here. Tested once, twice, 3 times, 4, 5, the 6th time. So literally, this is a very solid area, and there is high chances that market will just continue dropping down to break this week towards this week's low. Okay, massively towards this week's low. So this was my sell from Monday. Made good profit from just this one sell. Yeah, I made this good profit from just this one sell. I've just been aiming for sales this week. Oh, it's not just sales, because I know what I see on the higher time frame. And this was my sell from yesterday after the news, job reports in US, high job opportunities available. This was the sell, and then as soon as market got close to this place, I closed it and it came back into this point. Then with AUD inside that, I see that risky assets are weak. I started aiming for what I know that market is going to come back towards this other block here. This, and then this was meant to be my entry. 20 pips stop loss, which is going to be away from this zone literally, and then 100 pips take profit, which is to take out this week's low. Because literally most times they copy each other, and it could go and take out the week's low due to AUD took out the week's low as well. But I'm not just going to. There's no high correlation within the two. But I'll basically.
Do you mean between AUD and Euro USD and which one?
AUD and Euro USD.
Okay.
So then for GBP USD, you are looking for buys. Yes, you're correct, to be honest with you. But I had sales in mind though. You understand? Why I was quite convinced a bit was because GBP is one of the strongest currencies today. It is the strongest. It's not that it is number 1 on the list. It is at 34.85. Highest. You can see AED is on the bottom, minus 72.63. So it's possible.
Is that not okay?
It's a currency strength
meter.
Is
that the ranking? Yes, are you trying to say USD is the strongest?
No, I said that GBP is the strongest, 34.85. You can see there now with the green line.
Yes,
Yes.
yes.
Then below it, the second strongest pair today is Canadian dollar, which is 31.79 as at 9:30 a.m. because this thing refreshes itself every 5 minutes. It refreshes itself every 5 minutes. It refreshes itself every 5 minutes. So I know the current pair that is currently ranking. So based on this, I just came here. I saw AUD is weak. I know that, yeah, AUD continues selling against every other pair, including the dollar. Then Euro has dropped below dollar. Euro is now 21.95. Dollar is 29.35. So that's why I'm seeing massive sales. So I'm not really going to panic much. I think GP will still drop below the dollar. And my target for GP, okay, which is to take this low here, is 40 pips drop. So this was my target. And I saw it on the 5 minutes. And you are saying buys. I was like, why is this guy saying buy? Why I was
Sir,
saying
this
sell is
is that thing
because
I'm telling you
probably this is
about.
what.
If you check now, if you see the market have started moving now that we're
Okay.
close to 9:30. So sometimes when I'm kind of like undecided, like the way I was this morning, I wait for
Okay.
9:30 to get a hang of where the market wants to go.
Okay. Okay. So
Because
literally
what
this.
happened?
Okay.
Go on, sir.
Literally this was what I saw. I saw this change of character. Okay. This change of
Mm.
character, and this is like let me also use a layman's term. Let me use a layman's term. This is what something layman is like show that. So a break of this neckline, okay, a break of this neckline is the entry. But if you enter at the break of the neckline, which is here, which is not going to be what a market structure break. After change of character, the second break of structure is called what the market structure break. So literally some people will choose to enter at the break of the market structure, like FX boots. That's his entry strategy. He doesn't even wait for a test. He just enter sell now at this point when this candle close. So literally you have missed a lot of pips. Okay, you have missed a lot of pips. And that is one thing I saw. I'll be aiming for this low. Yeah, I'll be aiming for this low just to take this low. And I'll be out from the market. Yeah, this was my target. Aiming for this low. So, but when you were saying buy, I was like, okay, let me
26 what?
uh
That low what? 26.5.
26,527. 26,527.
Okay.
So there is still high chances that this market would but I was just looking at your analysis though. Because AUD already told us that hey, every risky asset is meant to sell today. With that news on AUD, it's literally going to impact every other risky asset.